welcome to Africa Amplified, Bloomberg's monthly show bringing the continent's biggest stories to the world. I'm Jennifer Zapasaja in Johannesburg. We'll take a look at what 2025 holds for the continent and what could be a defining year. As South Africa hosts the presidency of the G20, what role will the continent play in shaping global geopolitics? Prospects are improving for the economy, with the IMF forecasting the highest growth for Sub-Saharan Africa since 2021, but social unrest could cloud the horizon. We'll hear from a leading economist and investors on their outlooks. All that and more coming up in the next half hour. But first, as we always do, an update on some of the top stories we're following from across the continent, from turmoil in Mozambique to the withdrawal of French troops in West Africa and a new stock market in Ethiopia. We'll have the latest from our reporters in Addis Ababa in the east and Cape Town in the south. But let's start in Dakar in the west. Ivory Coast president has announced the withdrawal of French troops from the country beginning this month. It adds to a growing number of francophone states that have asked the former colonial power to relinquish its military presence in West Africa. For more, let's get to Bloomberg's Katarina Hoyhe in Dakar, who has been following this story for us. Katarina, thanks as always for joining us. So talk to us about what's behind the French troops' exit now from Ivory Coast and really how this reflects the overall anti-French sentiments that we're seeing really across the whole region.
Exactly like you mentioned, Jennifer. I mean, the handover of the French military base in Ivory Coast and the anticipated drawdown of troops there comes as we're seeing anti-French sentiments, or maybe more anti-French policy sentiments, in its former colonies in West Africa. French troops had already been pushed to leave Mali, Niger, and Burkina Faso. They left Chad last month, and now Ivory Coast and Senegal has also announced that troops will be leaving this year. And considering Ivory Coast, considering 2025 is an election year, it almost seems as President Alassane Ouattara is preempting those anti-French sentiments there. And while Ouattara hasn't yet said whether he will be running, he is being nudged by his party to do so. And if he does end up presenting himself for the elections, he needs those to be seen as not influenced by France.
And Katarina, it's a blow for President Macron. I mean, what does it say about France's continued presence in the region? Will we continue to see more of these troops pulling out and potentially more unrest and people wanting to see France get removed?
I mean, it will likely turn France's focus to its remaining bases in Gabon, but in Central Africa, but also more importantly, its base in Djibouti, an important security hub in East Africa, but already has bases with the US and China. Also need to say that, Ivory Coast announcement does come as France has said it is realigning its security presence in the region and Africa in general. It's also looking to shift its focus in Africa from security to trade and business. French companies are already involved in telecoms, infrastructures, and consumer goods in West Africa. And it seems like it's looking to expand into East Africa and into Anglophone countries. We know that the first France-Africa summit outside France is supposed to be held in Kenya in 2026. We saw the recent visit of Nigeria's president to France as well. It's also unlikely that, unlike the military-run nation, Ivory Coast has said that this is going to be a controlled scale down. It also hasn't cut the military agreements with France, which actually opens up for France keeping contingent and continued training in Ivory Coast.
Right. We're going to leave it there with you. Bloomberg's Katarina Hoyhe in Dakar, Senegal. Katarina, thanks as always for your reporting. Let's turn to Southern Africa now, where waves of unrest have gripped Mozambique following the disputed October 9th election. The violence is the worst seen since the civil war ended in 1992, when more than 1 million people died. It's disrupted the economy and risks further delaying natural gas projects key to the country's future. Let's bring in Bloomberg's Matthew Hill, who has been following this story very closely. Matt, talk to us about why tensions have again escalated in Mozambique in recent weeks.
Thanks very much, Jen. Yeah, as you point out, the elections were held on October 9th, and opposition presidential candidate Venancio Mondlane was declared the runner-up in those elections. He declared the results as fraudulent and rejected them and called for various waves of protests. The Constitutional Council, which is the top electoral court in Mozambique, on December 23rd confirmed the results and the ruling party's victory, extending its time in power for 49 years since independence from Portugal. And that led to another wave of even more intense protests in the last week of December. We're now waiting to see what Venancio Mondlane's plans are. He's threatened another wave of protests.
Right. And Matt, talk to us about what happens next. Are we waiting for Mondlane to speak out? What are we hearing from the president-elect as well?
Everyone says that the best way out of this is dialogue. Venancio Mondlane has indicated he is open to international mediation, but the country finds itself in a tricky situation because President Filipe Nyusi, the current leader, has less than 2 weeks left of his time in power before he hands over to the president-elect in an inauguration ceremony that's scheduled for January 15th. Now, Daniel Shapo, who will take over from him, has told us that he's willing to speak to the various stakeholders, including Venancio Mondlane, once he's already in power. So we're sitting with a period of heightened uncertainty between now and then, and there are also fears that there may be renewed and intensified protests around the inauguration itself.
Right, and we should note this is a key tourism time for Mozambique, so definitely a hit to their economy that we're seeing. Matthew Hill in Cape Town. Matt, thanks as always for joining us. Let's go to East Africa now. Ethiopia is scheduled to ring in its brand new stock market this month as part of the country's recent efforts to open up its economy and position itself as an investment destination. For more, let's get to Bloomberg's Fasika Tadesse, who joins us from the Ethiopian capital, Addis Ababa. Fasika, thanks for joining us. What's the timeline for this new stock market, and really what does this say about the government's aspirations moving forward?
Thank you very much, Jane. As you said, Ethiopia, which didn't have a stock market since the 1960s, is is on the final chapter to launch the securities exchange. The official final date is not announced yet, but the Ethiopian Securities Exchange said it will be launching, or it will be ringing the bell the second week of January. What the government and the public are expecting from this, the government is trying to revolutionize the financial markets by launching the securities exchange, where the government itself will be raising fresh capital or fresh funds from the capital market, and also private companies will be able to get options to raise funds from the securities exchange.
And Fasika, this is really Prime Minister Abiy Ahmed's attempt to rebrand Ethiopia as a more markets-friendly location. Are there other measures, are there other actions that he has planned to continue to build investor confidence about Ethiopia? Launching the securities exchange being one of them. The government has been working on different reforms to open up the economy, including allowing foreign banks to join the Ethiopian market. Just a few weeks back, the parliament has approved a new law that liberalized the banking sector, allowing foreign banks to come and invest in Ethiopia. The other one is the liberalizing of the foreign currency regime, which was semi-regulated by the central bank that was setting daily exchange rates. Now, since July, the foreign exchange market is liberalized, and the rate is set by the market prices. The other one is opening up the export market and also the retail business that was only closed for local investors. Now it's open for international investors to come in Ethiopia and invest in these sectors. Fascinating. We'll see whether or not this continues to increase investor confidence. Bloomberg's Fasika Tadesse joining us there. Thanks so much, Fasika, for your reporting. Now, coming up, we'll take a look at the key events shaping the outlook for Africa this year. That's next. Stick with us. This is Bloomberg. Africa is set to have a bigger say in world affairs in 2025, with South Africa assuming the G20 presidency. And after an unprecedented year of elections in Africa, could the political landscape change even further? Bloomberg's Samuel Etienne takes a look at some of the key events to watch for on the continent in 2025.
From geopolitics to the G20, elections to the economy, 2025 is shaping up to be another bumpy year for Africa. Now, in January, our focus is on the Horn of Africa, with Ethiopia set to open a new stock exchange. It's part of Prime Minister Abiy Ahmed's plan to open up the nation to investors and help rebuild the war-ravaged country. Then, in February, the African Union will elect a new chairperson for its commission. 2025 will be another key test for democracy on the continent after a year of profound political change, with voters punishing ruling parties in several African countries. We'll be closely watching polls in Tanzania and Ivory Coast in October. And as part of its presidency of the G20, South Africa will host a number of events, culminating in the annual G20 summit in November. Now, President Cyril Ramaphosa wants to use his country's leadership of the Group of 20 to ease the plight of heavily indebted African nations in a year when Africa will have a bigger voice on the global stage.
Samuel Etienne reporting there for us on some of the events to look out for on the continent in 2025. Now, while investors will certainly be keeping a keen eye on that agenda, they'll also be looking to tap into the heightened growth potential on the continent. We spoke with 3 top Africa-focused private equity fund managers and found out where they're seeing opportunities.
It's one to be really excited about. Africa, as you know, is growing strongly, and we have consumers, particularly a rising middle class, that have lots of things to buy ahead of them.
The recovery that's been going on in Africa from 2022 to 2023, where inflation was very high, there were macro issues. This year, much of that moderated, and I expect that trend to continue, subject to, again, shocks geopolitically.
It's going to be areas where we're solving challenges that are also going to give us sustainable, profitable growth over time. And in the context of Africa, there are many opportunities that you can think of. Africa is it's at the center of critical minerals for decarbonization and climate change. And so when you start to think about that, and then you think about inequality, there's a confluence where you solve for both, while also generating attractive returns.
So we will be thinking about sectors like healthcare, FMCG, services, financial services. There's a lot of economic activity ahead for the year, and African PE will be taking advantage of that.
One big trend in Africa is the African consumer and digitalization. So the venture capital industry has grown a little down this year, but expected to grow. And even in private equity, we use digitalization not only to increase revenues and EBITDA, but get the multiples up as we exit. So we're going to look at how the macro trend continues, given geopolitics also, and we're going to keep doing and working on digitalization.
We've basically seen a number of policy shifts across the continent that have essentially stabilized, and now we can start to really leverage some of that growth opportunity that's always been there, but we can say the worst is behind us.
Now, the same fund managers highlighted FX as the main risk for 2025 after a year of extreme volatility for many of the continent's currencies, including, take a look at these, Nigeria's Naira, which plunged after its peg to the dollar was scrapped. There's also the South African Rand, which has fluctuated with economic and political instability. Ghana's CD, which we'll have on the board, also gained after a relatively calm election. And finally, the Kenyan shilling, which was the best performer for 2024, but that's after falling considerably the year before that. Here's what the fund managers had to say.
Biggest shock that we always deal with is foreign exchange. So actually the devaluation. So private equity is a dollar-based industry where dollar returns people. And so we have to look at the dollar returns. And when there are devaluations in Africa, given, again, the lack of, grain coming in, and so the price going up, energy prices over the last few years. So that is the single important thing.
Foreign exchange risk. As you know, the dollar has been very strong, certainly post-Trump's election. But even going into 2025, we do think a lot about foreign exchange risk, whether it is dollar-based or specific country-based. And so in the private equity industry, one of the benefits that we have is that they are longer-term investments.
Devaluation continues to still be the biggest one. However, what I would say is that because what we saw, the schism that we saw over 2024 and a small part of 2023 is something we haven't seen for for at least 30 years. And I believe that, it's when we haven't seen an era where we saw interest rates go up 500 basis points in the course of 1 year, at a time when debt levels were quite high for our markets.
Having said that, if you look at the two real countries that had significant devaluations, Egypt and Nigeria, they are moderating, more so in Egypt than in Nigeria. But some of the government policies in Nigeria, I do believe, are being effective, and I expect less inflation next year.
Going forward, the sense is that we have now turned that corner.
The IMF has raised its growth forecast for Sub-Saharan Africa to 4.2% this year, the highest since 2021. But African markets enter the new year with a series of known headwinds to consider, from U.S. policies to China's tepid recovery and also Fed rate cuts. So what will define the economic picture? Let's bring in Citi's Chief Africa Economist, David Cowan, who's joining us now from London. David, thank you so much for joining us. Before we get into 2025, I want to talk about 2024, because you say the log jam broke for African nations. What do you mean by this?
Yeah, so I think there's two things that happened that were very important. After several years when African governments were excluded from the global debt markets, you obviously saw that they managed to issue again. So Cote d'Ivoire, Benin, and importantly Kenya all came back to the Eurobond market. And at the same time, they reached an agreement, remember, in Beijing in September, where Chinese lending looks like it's set to increase again to Africa. So the finance came back. And then secondly, you had this huge return to orthodoxy that was alluded to actually in some of your earlier interviews this morning, whereby you saw these big devaluations in Egypt, Nigeria and Ethiopia, and this return to monetary orthodox policy, right? And that, I think, is the difficult adjustment that we've been through in 2024, which now, as you would say, sets the benchmark for where we go in 2025.
But David, I mean, each of the currencies, if you take a look at it across the continent, the currency moves were happening for very different reasons. Do we continue to see much of that volatility, especially if you consider the strengthening of the U.S. dollar? How do you think currency moves on the continent are going to be defined?
Yeah, so I'm not sure that there is such a big difference, right? And as an economist, I don't really buy into the idea that the US dollar moves actually impact much, right? The scale of the moves we're seeing in Africa last year and in recent years are well beyond euro dollar moves. Now, essentially what happened was that as Africa came out of COVID, the continent was haunted by this specter of default. And essentially that default did happen. We saw Ghana and Zambia default. Now, when a country defaults, what tends to happen is that confidence in the currency disappears, and therefore the currency comes under a huge amount of pressure. So it starts with the kwacha, then the cedi comes under pressure, the fear of the Kenyan default put the Kenyan shilling under pressure. Then some central banks, such as Egypt and Nigeria, fought against that fear of default, but eventually they realized that they couldn't fight against it and had to allow the devaluations to happen. Now, essentially, we've moved on now. So the fear of default is behind us, and hopefully that should start to ease the pressures on the currency going forward, along with the return of capital flows.
Where do you see those capital flows flowing to? Is it going to be a lot? I mean, we were talking about Ethiopia before. Prime Minister Abiy Ahmed is trying to open up the economy. Will we see the same countries really getting much of the FDI?
I mean, there's different ways of thinking about capital flows, whether you're worrying about FDI or whether you're worrying about lending from the World Bank or the IMF, or even from the private sector through the Eurobond and through investors buying domestic markets. I mean, I always point out to people, there's no secret in Africa. Yes, we have, around 50 countries on the continent, but essentially what we're dealing with is 18 to 20 of those countries, which account for 80% of the continent's GDP. So, FDI flows go to where the biggest economies are, starting with South Africa, Egypt and Nigeria, which account for 50% of Africa's GDP, and then into the other big, faster growing regions, which will probably be East Africa, Kenya, Uganda, Tanzania, and maybe Ethiopia, for example, if it manages to push ahead with its privatization program. And then, of course, in West Africa, Ghana after the election, Cote d'Ivoire and Senegal will all be relatively fast growing. In fact, Senegal will probably be one of the fastest growing economies in the world next year as oil and gas production starts. So I don't think it's any secret where the money will flow. There's obviously some little complexities. For example, does money flow towards resource projects in some of the smaller countries? But beyond that, right, I don't think we should worry too much about where the money will come back from. This is the entry point, I would argue. The collapse of exchange rates means that assets, particularly in Egypt, Nigeria and South Africa, begin to look cheap.
David, let's finish on oil because many analysts expecting there to be a surplus for oil. Who stands to benefit and potentially lose in this scenario? Nigeria is trying to be a powerhouse here. Where do you see this playing out? How do you see this playing out on the continent?
Yeah, I mean, it's interesting. Most forecasts do point to a weakening of the oil price, sometimes quite significantly. What I would say to you is that actually I don't think Nigeria, which historically would have suffered badly from a collapse in the oil price, will suffer so much this time. I think the move we've seen in the Naira means that Nigeria won't impact. But probably the region that will be impacted most is CMAX. So Central West Africa, places Cameroon, Gabon are going to have a difficult adjustment, followed by Angola, which could also have quite a difficult 2025 if the oil price was to fall significantly. But there's 2 points I would make about the oil price. The first is obviously there's winners from the oil price. Remember, there's 8 oil exporters in Sub-Saharan Africa, plus Algeria and in North Africa. So arguably, the point you would make is that the oil importers are winners. So East Africa is an oil importer. Okay, that will change going forward, but that would be a big winner.
Right.
The complexity is West Africa. Remember, West Africa in recent years has become this melange of oil exporters, but oil importers. Right. So Senegal, Ghana, Cote d'Ivoire have this mixed impact.
David, I could talk to you for quite a while, but we do have to leave it there. David Cowan, Chief Africa Economist at Citi. That's all we have time for this month's Africa Amplified.